Asian Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Now, Kelvin, as always, thank you for coming on the show.
Hey, my pleasure, Brian.
Now, Kelvin, before we get your insights and analysis, let's take a look and see how cryptocurrencies have performed today, and then we'll swing over to how regional stock markets are performing. Now, Bitcoin is at 43,299.3. It's down 2.15%. Ethereum is at 2,891.76. It's down 3.52%. Now, looking across the regional stock markets, we start at close to home with the SGX. That's at 3,262.56. It's up 0.56%. If we look at the Bursa Malaysia, it's at 1,610.72. It's up 0.68%. Shanghai is at 3,405. It's up 0.11%. ASX All Ordinaries is at 7,457.6. It's up 0.69%. The Nikkei is at 26,581.5. It's up 0.71%. The Hang Seng is at 22,445.5. It's up 0.46%. Rounding up the numbers, we've got the Kospi, which has done the best this morning. It's at 22,742.35. It's up 1.44%. So, Calvin, give us an insight into what your view is on how markets have performed this morning, and then also give us some insights into the overnight testimony of Jerome Powell to Congress.
Sure. So what we could see, it's more of a sentiment play right now, very short-term sentiment play that is pretty much dependent on the global stock market as a whole. So if you could see today, Asia's session was actually a kind of a feedback loop, a positive feedback loop that's been triggered by the overnight positive showing on the US benchmark stock indices. So what we could see over here is that the US benchmark stock indices all closed the grid with a return of a daily return of a range of 1.8 or 1.7% to 2.5%, depending on which benchmark indices you're looking at. But overall, supports are still holding. So what we could see over here is that from a technical analysis perspective, key long-term support level on the SPX will be at this 2940, and sorry, at this level of maybe perhaps let's take a quick look on the SPX index. So what we could see over here is very quickly. Let me switch to the SPX index over here. Do allow me to log into the platform because it's a bit lagging at the moment. Okay, so give me a couple of minutes. My apologies on that.
So,
Okay.
so our audience gets insight into how a currency trader and stuff gets his information.
So basically, what you could see now, this is the weekly chart of the SPX 500, which is the benchmark for the US stock market, as well as a global benchmark for the global equities as per se, given the importance of the US stock market. So what we could see is that the 4240 was a pretty critical support level that the index got to hold, and in fact, it held last week. And this week, it actually staged a dramatic rebound off from it as well. So what we could see over the shorter term over here is, if we go to the 4-hour chart, what we could see at this point in time is it got to break above. So right now it's actually toggling between sideways for the whole of this week between a slightly shorter term support level above 4240, is 4290 and 4470. So it actually kind of all driven by this news flow for Ukraine and Russia itself. So unless we got a bit of clarity on the Ukraine and Russia situation, because right now everything is that it's been the 7th day and Russia is still invading Ukraine, and Ukraine itself, it's still stalemate between these two countries. More sanctions is being imposed on Russia, and in fact today there's a second round of a negotiation talk between delegates from both countries. So if we start to see a bit of positive sign out from this negotiation talk, where maybe Russia will start to back down a bit, and Ukraine may give in a bit towards Russia, I would say demand, then we will start to see a bit of more positive optimism into the markets. But nevertheless, in terms of levels wise, it got to break above 4470 before we can see a more pronounced technical rebound towards 4590 on the SPX 500. So now everything is still it's all dependent on how the situation in Ukraine and Russia plays out from here.
Okay, so then Calvin, tell us about its impact then on forex markets.
Sure. So when we talk about the forex market, what you could see, maybe let me talk about a bit about what happened overnight in Powell testimony to his usual biannual testimony towards the Congress, okay, which is one of the House, that's in charge of the financial sector. So what he did mention over here is that he's still pushing ahead with the rate hike that's going to take place later this month, which is close to about 2 weeks from now. So it will be a 25 basis point hike for sure. I mean, he already cemented that. So the 50 a call for 50 basis point has definitely been reduced to zero, close to zero in terms of probability given the situation over here. And what he did mention over here is that he's still pretty much concerned about elevated inflationary pressure that is coming to the marketplace right now. And what he intend to do is that he intend to have successive or consecutive interest rate hike throughout 2022, so that markets raised to price in at least 25 basis point hike this year at a minimum. At a minimum. So he did mention that he's more concerned about inflationary pressure right now rather than the impact of potential global economic slowdown or a adverse demand shock that is coming out of this crisis in Ukraine and Russia. But however, he as usual, Powell give a open door speech. He did mention that he got to be more dynamic going forward. So he is still looking at the situation, or in fact, his officials and himself are looking at the situation pretty much closely in Ukraine, Russia, and how does it actually evolves over time, and they will actually apply the appropriate we call it a policy accordingly to actually maintain we call it their mandate. But for now, their concern is to control inflation. So with that in mind, right, that could actually benefit the dollar because initially, right, we talk about if the Fed start to turn dovish, the interest rate differential between US and the US dollar and the rest of the currency will start to get narrow. So, but let me share the chart of this dollar performance year to date. But in fact, dollar is you can see that dollar index as a whole is strengthening, but it's not throughout the dollar strength across the board itself. So this is the year to date. It's live right now. Year to date performance. So it's dollar. So dollar as a base currency. So $1 equals to how many euro? So what you could see is that dollar is strengthening dramatically against the euro for sure. So this is dollar per euro. So it's up. Dollar is strengthening at 1.8% year to date. So one of the reason very clearly is due to the proximity of European nation that is very close towards this Ukraine and Russia crisis. And most importantly is that they are actually dependent on Russia energy exports who are being sanctioned right now, who could actually potentially lead to a economic, we call it a slowdown in Europe itself because due to the elevated pressures that's being hit on the European nations in terms of inflation and also in terms of profit margin pressures on the European company. So that actually explains a weaker euro. But what's surprising over here is that the bottom of the line, the bottom of the chart is currency that's actually strengthening against the dollar, which is the Aussie dollar. And you have the Canada dollar, as well. Surprisingly, closer to home will be the Chinese yuan itself. All right. So maybe we talk about the Chinese yuan for quite some time back in our various shows. So let's emphasize more on the CAD and the Aussie dollar. So one of the reasons why the CAD and the Aussie dollar is just strengthening against the dollar, or I'll say kind of resilient against dollar, is due to their commodities related play itself. So as you know that Canada dollar is actually related to the oil. So with a very elevated oil prices right now is actually supporting the Canada dollar. So that's why you see the Canada dollar strength is not so much strengthening, it's so much weakening against the dollar, pardon me. Yeah. So on top of that, the Aussie dollar is the one that is outperforming the rest of the board. That means the dollar is kind of weakening against the Aussie dollar at now negative 1.5%. So the reason why Aussie dollar is actually kind of resilient right now against the US dollar is due to number one, they actually it's so related to commodities, but not in terms of the physical commodity because Australia don't actually export oil in terms of you know what I mean. More on the
And
companies
iron
that
ore
actually
and
yeah,
various other commodities.
yeah, but it's more of related to their equity play, commodities related equity play. So potentially, what we could see right now is that we start to see a very strong rally close to about a double-digit rally in the last. In fact, it's really a month or so already. If you look into a month perspective on commodity-related play like BHP Billiton and Rio Tinto. So there actually we could see potential net hot capital inflows into these commodity-related stocks in Australia. We have plentiful of them. So being the majors are BHP, Billiton, and Rio Tinto, and we have the other smaller cap stock as well as benefiting from this very strong bullish trend in commodity prices. Okay, so that could actually explain the reason why this strengthening of this or the resilience of the Aussie dollar that's being seen right now at this juncture. But we got to be more cautious over here is that if anything that is coming out into the market that we start, for example, if there's some headway that's being made on the negotiation talk between Ukraine and Russia, we could see a bit of profit taking to come into place of these elevated commodity prices that has been rallying on top of this crisis in Ukraine and Russia. So we got to be very mindful of that because of a bit of over positioning. So yeah, right. So perhaps do we have a bit of time because I want to share a bit of the oil price chart.
Sure, please go ahead.
Okay, so lastly, let's take a look about the chart of oil. So this is the oil price chart over here. So this is the daily chart. So what we could see is that the last 3 days we have a very strong dramatic rally. So this rally right on the oil price actually take us up close. Okay. Let me delete this. Okay, so it's close to 20% within 3 days. So that's a lot of we call it a movement to this the oil price. But one thing to highlight about the oil price chart, this is WTI crude oil futures, this perpetual contract. It's now at this trading about 114 level. So now it's coming very close to a major resistance. So what we could see over here, so that's the swing high of May 2011. So that's close to about more than we call it 10 years of price action in the past, which previously price of oil refused to break and start to shape that dramatic bearish downtrend, multi-year downtrend. So now it's actually trading at this major resistance. So what we could see over here is sentiment of oil has been pretty much bullish. And in terms of positioning wise, I reckon that there could be a bit of overstretch or over positioning on the bullish bets, net bullish bet on WTI crude oil. Hopefully, okay, let me scroll down. I can't expect it. Let's take a look at this, the forward curve. So what we could see over here, this forward curve is actually downward sloping. So on your the bottom line of the chart over here, which is the x-axis of the x-axis, actually telling us the current dated contract in March itself, which is quoting at this 11314. And if you look 6 months ahead down the road, which is around in September, it's actually quoting at 91. So you're talking about in terms of this is called backwartation, where markets really starts to price further down the road. Oil prices, the chances of oil prices dropping down seems to be it's not remote, but it's quite prevalent in the marketplace right now. I mean, the odds are quite high right now in terms of the oil prices. The forward, I would say that 6 months forward down the road, oil prices are not going to be at this level, which is 100. It's going to be back to some normalization below 100, which is quoting at about 91 right now on the September contract. So that's close to about 15 to 20% of discount in oil prices. So what you could see over here is that oil prices currently is being elevated, but there's a potential over here is that being you know that as you could see that there's a risk of stagflation coming into the market, which means i.e. 3 to 6 months down the road there will be a potentially demand slowdown for oil because economic growth has started to slow down. It could actually start to see a bit of normalization in the oil market, lesser demand, because right now over here this oil prices is driven by sentiment and as well as potentially short-term speculation in terms of the over positioning of these oil prices that is actually being inherent in the marketplace right now, that's driven by this supply situation where there's this risk of supply constraint where Russia exports now is getting harder to flow into the market due to this sanction that we place on them. So for a short term, we call it a player to watch over here, that this short term support, which is 103.40. So if we start to see 103.40 that's being taken out on the downside, we could start to see this more pronounced consolidation to take place below 100 level with the intermediate medium term support at 95.45. on WTI crude oil futures.
Kelvin, thank you very much for your analysis in oil markets and FX markets in particular.
Thank you, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our website, www.biztech.asia, as well as our social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.